Three markets, one story. Coming out of the July 4th weekend, the S&P, the Nasdaq, and crude oil are all leaning on the same macro thread. ES mere 7,560. NQ pressing 30,000. Crude at 68, below every major average. Here is the full map for the week. Underneath all three sits the same wiring. A dollar firm enough that sell-side desks cut their euro forecasts, but soft enough over the weekend to lift crude and gold. A Federal Reserve that just absorbed a payrolls miss, 57,000 jobs against a 113,000 forecast. And one survey line everyone circled, services prices paid, expected to cool from 71.3 to 67.5. If it cools, all three markets breathe. If it runs hot, the inflation versus weak jobs tension caps everything. And gold at 4,154 is quietly bidding for a hedge nobody is talking about. Start with the S&P. ES recovered over 2% in 5 sessions and is pressing straight into the first layer of dealer resistance. Supply is stacked at 7,577, 7,588, and 7,607. Dealer gamma is net positive, roughly 5.4 billion in call gamma against under a billion in puts. So desks fade the moves and the index pins. And here's the detail that matters. Implied volatility at 13.4%. Sits almost 4 points under realized. Options are cheap. Somebody is going to want them before the week is out. The plan writes itself off the strongest shelf on the board. Buy the first pullback into 7,530 to 7,540, where Thursdays settle, the daily pivot, and the overnight low all stack together. Stop at 7,507. Targets 7,574, 7,588, and 7,607. A forced break below 7,528 kills the idea. Base case for the week, a constructive grind higher, 50%. The Nasdaq is the more dangerous index to chase. NQ carried back most of Thursday's semiconductor flush, then stalled at the one number that matters, 30,000, sitting right on the 20-day average. Beneath price, dealers are in negative gamma, with put positioning materially larger than calls. That configuration amplifies moves in both directions. Above the 30,100 to 30,150 zone, the amplification relieves and the path clears. Below it, every catalyst gets a megaphone. That is why Thursday's slide moved as fast as it did. So the trade is a long that respects the ceiling. Buy a pullback that holds 29,810 to 29,840, or a breakout that holds above 29,915. Stop below 29,730. Targets 29,955, then 30,057, then 30,141. If 30,000 rejects, the same levels flip, and you fade back toward the 29,735 pivot. The put-to-call tilt near 1.35 says the hedges are already on. Crude is the cleanest bearish structure on the board. Price sits below every major moving average. The 20-day at 76.64, the 50-day at 85.41, even the 200-day at 70.18. The composite reads 88% sell. But this is also a spring under compression. 14-day relative strength at 29.7, stochastics in single digits, and a soft dollar at its back. Deeply oversold plus a weak dollar is the recipe for a sharp bounce inside a broken trend. Respect both sides of that. So, the trend and the tactic agree. Sell strength. Fade the 69.30 to 69.65 shelf towards 68.18, then 67.55, then the pivotal 67.04 base, where the 1-month low, the 13-week low, and the deep support band all stack in one place. Stop at 70.40. Reclaim the 200-day at 70.18, and the bearish thesis takes its first real crack. Until then, rallies are for selling. Now, here is the read that pays this week. The two indices are trading the same catalysts for opposite dealer books. The S&P is long gamma. It pins. The Nasdaq is short gamma. It amplifies. Whichever way the data breaks, watch which market pins and which one runs. The calendar for the week. Monday, services data and Fed chair testimony. Tuesday, the 3-year note auction. Wednesday at 2 p.m., the Fed meeting minutes. And the fattest tail is not on the calendar at all. It is the Strait of Hormuz, where crude near 68 is telling you the market treats the shipping threat as contained. For now, the base cases: S&P grinds higher, 50%. Nasdaq bullish above 29,810, 45%. Crude stays range-bound. For the full level maps and daily analysis, hit subscribe and turn on notifications. New analysis every evening at algoindex.com.